Hi, my name is Adnan Hasbi and welcome to Funny Finance Guy. In today's episode, we will talk a little bit about ETFs. So we're going to start about talking what are ETFs. The next, we're going to talk about the benefits of ETFs. And finally, we're going to talk about how to invest in an ETF. So I'm sure if we Google ETFs, in fact, I did the same, the definition is a bit confusing. So the best way of looking on what an ETF is basically a basket of assets. It could be stocks, it could be bonds, or it could be commodities. To break it down even further, assuming there are three investors, Mr. A, Mr. B, and Mr. C. All of them want to buy the FBM KLCI stocks. Having said that, individually, they cannot afford to buy all of the stocks listed in this index. But collectively, if Mr. A, Mr. B, and Mr. C decides to pool all their money together, they will be able to buy all the stocks to do so. So this is where we have an investment fund, and the investment fund has three investors, and the money will be used to collectively buy the shares in the FBM KLCI index. So that is an ETF in a nutshell. So amongst the benefit of investing in an ETF are many, but I'm only going to focus on two, which I think are the most important, in my opinion at least. The first is diversification. Now for this, assuming if there are two investors, Mr. A and Mr. B. Mr. A wants to focus while Mr. B wants to diversify his investing. So what Mr. A does is he invests only in one stock, while Mr. B invests in 5 stocks. So Mr. A invests as much as 2,000 ringgit and Mr. B invests as much as 10,000 ringgit, 2,000 ringgit in each stock. At the end of the year, assuming if the stock Mr. A bought drops in value of 20%, so he will lose as much as 400 ringgit. Mr. B, however, believes in diversification and he allocates 2,000 ringgit across all of these 5 stocks, and this is his returns at the end of the year. So stock A dropped, but all the other stocks helped push up his overall portfolio. The second benefit of an ETF is that it is cheaper compared to a mutual fund. So how a mutual fund works is there are many investors, which I represent in this circle. They put all their money together collectively in a fund, and this fund is managed by fund managers, which are supported by financial analysts. The salary for the fund manager and all the analysts will be borne by the investors. And how investors pay for their salary indirectly is by management fees. ETFs, however, are passively managed, and basically you only need one fund manager at most to look at the maintenance of that ETF. So an example of this, if an ETF follows the FBM KLCI, the fund manager would look at the list of the stocks listed on the FBM KLCI, and every so often he will make changes to reflect the index. Finally, where does one find all the ETFs listed here in Malaysia? To do this, go to Bursa Marketplace, hover at this little chart and move down to ETFs, and you will be able to see all the ETFs listed in Malaysia. Next, what you can do is pick one of the ETFs, assuming if you pick the FBM KLCI ETF, which I've done over here. We can click at charts to see the performance so far. So over here, we'll see how far we can go back, and let's look at the performance of this ETF. So over here, as in 2015, the ETF was 170 and today it is 164. So in a span of 4 years, this ETF kind of lost money. Let's look at another ETF. This is my ETF Dow Jones Islamic Malaysian Market. These are Sharia compliant ETFs. which tracks all the blue chips over here in Malaysia, which has been approved by the Sharia Council. So if you want to invest in shares, but you are afraid of the non-halal element, if you don't want to invest in companies which are involved in gambling, so this will be a perfect ETF for you. Now let's go further back and see the performance of this ETF. Okay, so over here, as in 2015, it was 110, and today it's 118. So in the span of 4 years, you made 8 cents. Although there are many reasons for this performance, but I would like to pick up 2 reasons. I think the first one is ever since when I joined the investment industry since 12 years ago, Malaysia has always been focused towards oil and gas and plantation. In fact, today, they are still focused on these 2 industries. And even with the 5G, as you know, the project has been put on hold. So Malaysia as a whole has not evolved its competitiveness to fight in the technological era. The second reason could also be the negative news flows we have been reporting for the past 2 or 3 years. Aside from that, with the fast-changing political landscape for our country, there are certain projects which are being scrapped and certain projects which are renegotiated. Generally speaking, it's a bit confusing where the economy is heading. So with that, it is reflected in our stock market, where we can see everything going kind of sideways. Having said that, however, if you followed my channel back a couple of weeks ago, I did highlight one of the ways to invest is by looking at trends. And if we were to look at an ETF which tracks only e-commerce stocks, that ETF has rose from $25 since 2016 up to $70 as of today. So in conclusion, investing in ETF are great. But having said that, we need to be able to stop big. And with that, I'll see you in the next episode.